Good evening, guys. Ken of Tortoise Capital Nightly Strategy Podcast for January 12th, 2023. Just a quick update for the coaching crew. Our opportunity trade in Ethereum, ETHE, on the 30-minute bars. We alerted and bought here on the 3rd at 450. And today is up at 740. So that's a pretty good trade. At the moment of the entry, it was trading at an extreme premium, or discount, I should say, to the underlying Ethereum. And our targets were the congestion, the 10-day high, a couple peaks, and then a return to previous work. And this clearance today of the 10-day high after this little consolidation, this thing is off and running potentially, so we'll see. So that's looking pretty good. Good job to the folks who were tagging along on that one. Here's the sniper trade of the day. So this one is U.S. Steel on 3-minute bars. Here was yesterday's close. Now I've added the color-coded RL10 to show the seasons of MACD, and that'll make it a little bit easier to see how that influences some of our decisions. So we're on the 3-minute chart. That's part of the TC2000 bundle, the comprehensive, professionally coded, complete trader's package of all my systems, short-term, mid-term, and long-term. So here was the gap up. This was the OR3, opening range 3. The second bar opened and then broke through. So we get our short right here. Standard risk box. Starts off fairly well. Oops, let's get that moving. We get a retracement and exit at the edge of the dragon after it kind of basically held support at yesterday's lows. This was I treated this one as a COTA 2. It higher lows, breaks through the PSAR, standard risk, quick fail, short at the break of the PSAR, standard risk box, quick fail. On the second break, now after a couple fails right in a row, I let it get this, and then on the break again, get it short. One more time, standard risk box. I'm noticing these lower highs, so it feels like it wants to go down. So there's our standard risk box. There's the entry, short. Another quick fail. So it's just getting ground up into a pulp right here. But just keep from. So it's held twice at that level. So this failure to fail further, exit, and then stop and reverse, standard risk box. I noticed the winter turned to spring, where you see it turns into yellow. That's turning to spring. This feels better because we've got a higher low here. The PSAR is still holding. It has cleared. The RL10 has cleared the previous peak, so this feels like we're finally maybe going to get some traction. So this may end up just being the morning shenanigans. The lid is off of it now that we're above, we're above that tradable, that trading range. And now we've got about 2R in hand and a R10 wiggle, and it continues to go. So that's the 2R battle drill. Now it's really feeling good. Standard exit. Now, after a really nice move like that, especially with the early chop, you've got a really good leg one, a really good leg two, and then this is the peak. Then it has a lower high and an inside bar. I'd be accepting an exit there, but I took it right at the edge of the dragon, because on those nice runs, you notice that most of that price action on the explosion up is all north of that upper skin of the dragon. So when that finally starts to collapse, I'm good with just taking it right there and capture all of the favorable gains. Check or hold. Considered the PSAR flip and the supported fall crossing. Thought about that hard. But I was persuaded that the upside move was the better move. So, and what with the early chop, I wanted to enjoy the move a little bit. Now regretting I didn't take it. But not for long. So if you had been short on this entry with a standard risk box, that move to here puts you at plus 1R, and then you should take that exit as it comes back so you capture the no lose plus dinner for 2. And then that clears the deck, and now you have what kind of pattern on the entry long with the standard risk box? What would we call that entry? Cotta 2. Standard exit. So again, this is one of those where you notice the you get a little bit of grinding, and then as it starts to pick up the speed, you notice that it goes from the fall, which is the blue, into the green of the summer. It peaks and then rolls over. I'd have been content with an exit anywhere along that region. I took it at the PSAR, and that's a little over plus 1 and some change. And then we were close to the end of the day, so I didn't take that last one, although there may have been a fraction available in there. So when we're totaling up, we get about 0.5 on this one, minus 0.7, minus 0.3, minus 1. So that's about minus 1.5 for the opening salvos. And then this one gets about 1, 2, 3, 4. This is about plus 4. And that's about plus 1. So nets out to about 3.5 for the day. Just keep firing. Just keep taking the patterns. Study it later. Let's see here. We'll take a look at the 30-minute in the S&P. So now we got the SPY in 30 minutes. The support levels, the Cotta 2, second day of good moves and closed pretty strongly. Made a new 10-day high today, so this is showing some promise for tomorrow. And we just moved into sideways normal yesterday, so this is beginning to look healthier. And here is our, this is the 30-day look back. Here's the 10-day, the 5-day, and that's today. So we went from winter to spring right here. So that's a PSAR flip and essentially an SSC entry in that market condition. And it's still cruising along nicely in the spring. So we like that. And new 10-day high, looking for a return to the peak of the dragon around, say, 405, and the peak of the RL30 or RL10, 406. So those are in play. So we'll see what tomorrow brings. There's if we get another move like this tomorrow, this thing could get as high as 405. The dragon has rolled up. The PSAR is in the 5th day of cruising up. So there's an owl entry in that vicinity. So this is feeling pretty good. This is the test right in here, though. All that chop. This was the opportunity on the maximum excursion from all that chop. And all it's done now is return. So now it's back into neutral position. And which way is it going to go? I would treat that as a critical state right there. And that means there's room for a strong move in either direction, equally likely in a sideways normal market. On the 150-day look back now, you can see a little more clearly the changing of the seasons, like winter to spring to a nice summer, a rollover into the fall, then the winter. This little price bump was enough to put it into the spring, but then when that failed, winter, spring, winter is an instant short, and then it holds till here. Then you have a fall or a spring, summer, fall, summer, that's an instant long, fall, winter, back into the spring. So here we are wondering, are we going to get this move back to 405, or are we going to get that move back to 380? That is a perfect compound critical state. It's stuck right in the middle of our 150-day high, which happened back here, and our 150-day low, which happened back here. So this is a fence sitter. What makes it nice for the upside is you have these support levels that have held, and now you're right in the middle of this range here. So we could have a tactical move to here, and then if that breaks, return to forever, if we can say it that way. One of the things we want to notice if we step back a little bit and look at the sectors, we're going to notice that today the S&P is in the bottom of that stack, and that almost everything made money today with only a few exceptions. And you'll notice that if the S&P's here, you got emerging markets in the Qs and diamonds and the Russell and treasuries. So that's where the Russell small cap really paid off today. And part of that reason, I think, is that for the last 6 weeks, the globals have been better than the S&P. And the S&P's been getting beaten up, so the U.S. markets. Well, the last couple days has featured the S&P starting to get some traction. So if money that has been in the globals is going to move to the U.S., then the aggressive portion of that money that's rotating could go into either IWM or the Qs. And if you're betting on the broader economy, you go with IWM, which is where that is now. If you're want to be narrowly focused on the tech leaders, you look for the Qs. And right now, so far, it looks like IWM is outperforming the Qs. Okay. All right, let's zoom in a little bit. Take a look at the ones that were. We'll start with the ones that were worse, just so we know where the weakness in the market is. So the S&P is here at plus 0.36, Tesla at 0.28, finance, staples, or I'm sorry, finance, consumer discretionary, staples, and VIX. And then Texas Instruments in the semis was bad today, whereas Intel in the semis was really good, and Nvidia even better. So Texas Instruments is losing inside the semiconductor area. So this is the case where tech was not all that great at 0.54, and in the semis you're having a real distinction between Nvidia, Intel on the upside, and Texas Instruments on the low side. So this is a case where the individual companies are starting to differentiate, early positioning on the next growth sector, possibly. Apple disappointed, being at 0.06, not participating in the upside of the market or tech, or even S&P tech, whereas Microsoft at 1.16, clearly outperforming Apple in the battle of the value plays in conservative tech. All right, let's look at the upside. So better than the S&P were materials, Aussie dollar, then the whole stack here of agriculture, uranium, S&P tech, blended commodities, oil, Brazil, U.S. real estate continues to do pretty well. We got that swing trade still working there. The next cluster. Now the FANGs. This is important because the FANGs, those mega large cap behemoths, 1.26, which outperformed the S&P tech and the NASDAQ tech. So that is buying the conservative leaders like Amazon, Facebook, Meta, Google / Alphabet, all of those guys. So the modern tech. Marijuana, Mexico, the two lumbers, 1.5. Silver, wheat, and precious metals, 1.83. ARC Innovation and Lithium, 2.5. Clean energy and oil exploration, 3%. There's your Nvidia now at 3.19. Devon Energy, 1.8. Then to close out the winners, ARC Genomics, commercial real estate, 3.8. Biotech, 4.2. Bitcoin, 8.7. And Ethereum, 15%. Now here's your metals. Cliff, 8.6. U.S. Steel, 4.3. Alcoa, 2.64. So a clear case of the metals getting the boost, and better than XLB, the material sector. So that's a trend. Financial disruptors, Coinbase, Robinhood, continuing to do, PayPal, all doing better than the market. Boeing in defense industry still getting it done, 3%. So the move in metals looks important to me. Okay. I want to shift to the swing portfolio. As you can see, I've added the Four Seasons to this one as well. So Cliff, our swing entry was here on that COTA 2 with a nice tight stop, and we've let it grow. It's time to move that stop up to the PSAR and just let that trail. That's a pretty good move. U.S. Steel, the stop we had here, I'm now going to move that up to the PSAR and lock that in. We're in good shape from the this breakout entry here with the standard risk box to the PSAR. Chunks around a little bit, and now our stop is up in here, locking in all that goodness. That's good. Next up, clean energy. Crushing it. We're going to lock that in. Move our stop up to here. So on that initial risk, just letting it grow. Now we've made bank on that. I should have added a position on that one today. What are you going to do? Treasuries continues to do pretty well. You can see this is a that whole series of Kata 2s. That breakout here today was significant. So I want to get my stop locked in around 107 and make bank on that move. Devon Energy doing well on our Kata 2 entry. Tight risk. Let it grow. Note you got the Kata 2s all the way up. Made a new 10-day high. Held pretty well. I'm going to go with my stop right here. Again, I want to make bank on that and lock it in on a Friday for tomorrow. Mexico just crushing. I'm going to move that stop up to 56. Missed an opportunity in here for a third position, but I feel all right on that, having locked in that on 2 positions. So Mexico's working really well. Real estate, the Kata 2 signal held. This should have been the next position because it broke above those 2. Just missed it. That move of the last 2 days has been pretty good. So I'm just going to lock in to the PSAR and be content with that one. And then Brazil, also doing really well. Let's just go ahead and lock that into. I think I want to go right there. So all the swings turned out pretty well. I want you to notice that we've got a pretty eclectic mix of least correlated asset classes in there. You know, we got the 2 metals. So from the metals, which have been doing pretty good, we got Cliff and U.S. Steel. We got we have a clean energy, which is a really good swinger in PBW. And we've got conventional energy in Devon. So that's almost like a pair trade. You can see, it may be that one or the other of those becomes better, but right now the whole energy complex is working fine. Treasuries as the alternative to equities. We got the 2 non-U.S. emerging market kind of things with Mexico and Brazil, not the U.S., not Europe, not Asia. That's doing really well. And then finally, IWR as the U.S. residential real estate with a nice dividend. So there's a pretty eclectic mix of that. So if I were to draw SPY in the center, each one of those really represents a significant divergence from the broad U.S. market, which gives me an opportunity to get some uncorrelated swings from a sample of those outliers. And it just happens that they're all been working pretty well over the last week. So, you know, we're grateful for that. All right, we'll look at the traders next. as soon as we get them pulled over. There we go. Here's Kyun commenting on the coaching feedback from yesterday about the importance of the K2 pattern, which helped paid off today with some improvements in his practice. So he's getting a lot of a lot of stick time in that in the airplane. Here's Woj, EWW. So he has the K2 short. It moved against him, so he took the 1R loss. Missed the Kata 2, missed the Z3 break, missed the Kata 2. Oh, I'm sorry, he was in a meeting, so we would expect him to get a good portion of that move. Here was kind of the OR3, and he bought the breakout prematurely, took the hit, could have taken that one and gotten it back. Could have taken this and maybe made something, but probably scratched it. Then when this resolves, here's a Z3 breakout, but there's really not much there. He was locked in a meeting and then probably had an urge to trade. I like that entry on the Kata 2 breakout and then a quick scratch, so it just the meeting timing harmed him in those two series today. His work in Devon was basically a scratch. There wasn't much. Maybe that was the only move that was available and he didn't get it. Now on this one in Tesla, we gave back more than half. So here's the point I want to make. When you get more than 1R and this thing that's out to 2R, I think if you know what your average win is, that's where it gets past 1R. You got to start preserving the skin of the dragon. So this is all the excess gains. And your maximum favorable excursion was to here. And then it didn't fail any further. So you had about 4 bars. So take it there instead of here and double your gains. And then that becomes 1.5. Was in the meeting. That's still a pretty good shot, but he scratched it all back. There was the Kata 2 re-entry, which would have paid in U.S. Steel. This was that early morning chop that chewed me up on the sniper trade of the day, by the way. Apple minus 0.5. The meeting was just not favorable for him today. So today was some learning points about preserving the gains of the excess moves in using the skin of the dragon to really lock in those above average wins. So we want to start respecting that a little bit more. Tim, I'm really not persuaded on ExxonMobil as an intraday trader. I just don't see the intraday volatility in it genuinely. Now, as a swing on 30 minutes, yeah, probably. I just don't think it's a great intraday mover. Just being real there. There's our OR3. Here's an entry and a cut. So, yeah, I just don't think there's enough room in there. Now, if you notice that your MMRB is here, you might on this case and notice that this is your PSAR. I'm not offended if you take a double MMRB and just say, because of the technical construction, I'm going to take that as my risk box. If you did that, this move right here probably keeps you all the way in until the dragon rolls over. So I'm not a fan of XOM on the 3 minutes. And when you see it's that tight, you might think about a double-sized MMRB. Remember, the R10 doesn't mean you have to trade that. You can also take into account the width of the technical chart. Nike OR3, that's the indicated short. Now, Nike does as opposed to ExxonMobil. See, ExxonMobil is tied to the cost of energy, which every large cap manufacturer in the world is concerned about energy. So the cost of oil really is driving the price of energy. So ExxonMobil's price variation is beholden to what's going on in the energy complex. But Nike, on the other hand, is just its own thing. Like, they're direct to consumer, so they are unencumbered by a lot of those other technical pressures. So it's not unusual to see that kind of big move twice in Nike, right? And here's the OR3, so that could be your short. And then if you get paid on this one with a risk box up here, something like that, when you see that maximum favorable excursion and you're at plus probably 1, 2, or 3, that's where you would use the edge of the dragon and then just don't let it go further up the stack than this. Like, don't wait for the PSAR flip. Lock in that exceptional gain. If you do that, then that actually allows you to think about taking that as your entry. Now, you end up scratching it, but you're able to get back to the zero state much sooner. Now, what I like here is the fact that you've added those Z3s, and now you've color-coded that so that you now know where the Z3 pinch is, because the pinched Z3 bands are telling you that is an abnormally tight pinch. And so now this little breakout from here gets you paid. Nice. By the same token, after this peak, we're just still compressing, so I wouldn't be in a hurry to play that. Except maybe on the short side. I wouldn't be taking that long. Mexico. That's your move. That has a nice intraday move. You crushed that one. You stayed out of the chop. Nice. Here's the pinch. Here's the expansion. Nice. The OR3, we could get short here. We'd probably end up scratching that one. We might have taken that one, the K2. If we did, with a sort of a standard risk box like that, and you get long here, on that gift to here, you come back and look and say, hey, that could not make a new high of the day and is starting to roll over. Why not just capture that? So some of those little tactical opportunities, I would take that as a win. Like, this was a 1 bar rejection. There was no follow through. Take the gift. And now you notice the compression, so you stayed out of that, and then you crushed that. That was really nice. Liking it. Cliff Nolan. Let's see. Get this. So getting back in the saddle. Late entries and then no re-entries. So that's going to be... So here's the OR3. I like the scratch. The PSAR flip, the lower highs, and then a breakdown below the VWAP. We could have gotten short here with a risk box there, gotten paid to here. Then I like this one because it's getting ready to test the VWAP, but as soon as that fails, I like the quick exit. I love the quick short. I love the quick exit, and then you got paid, and then here's your re-entry. It's a COTA 2 above the PSAR, and you've got strong support from it's above the VWAP and then strong support, so this could get us paid here. So we should end up around 1.5 on that one with best play. Microsoft, lates and maybes. This is over trading inside here. I like, the piece. Oops. This. So here's the open. That's the short right there, not here. Then this gets paid. then that's your SSC, and that was a nice exit right at the edge of the dragon, just like we're talking about. I love the reentry and the quick cut. You could be short right there, and then that actually gets paid. I like I like the long, I like the short. That's but the size of our box is too small. If the quick cut is giving us a 1R and a 1.2R loss, then when you measure that, you just got to say, look, I got to have a wider stop so I can take some fractionals. That's nice. Stayed out of the chop. So you're trading too many targets early and you're missing the OR3. That should be a 3R win, and that should be a 1R win. So we should be +4 on that. This COTA 2, we should be able to hit that. Support at the VWAP, COTA 2, we should be able to get paid there and here. Kyun with Cliff. Yeah, the metals chop me up in here. I'm going to say probably the same guidance too, that the MMRB is so small compared to these technical. Oh man, oops. The MMRB is so small compared to these technical patterns that even when you're cutting them short, you're taking full R losses. Yeah, so I like that short. I like reentry short here rather than here. It gets paid. I like this when that clears the peaks of the earth. That's a good second shot and getting paid there. That's what you got to do. You just got to say, look, I'm making sawdust in here, and then when it pays me well. So we got to reduce the size of the risk boxes early in that one in order to take advantage of that. But I like the fact that you were able to dig out of that hole. Good for the resilience. And then in Brazil, I like that you're not over trading, although you do recognize the opportunity is there. This is why I like EWW and EWZ, because they are such large, broad country indexes with their own currency. They tend to be smoother. There's a lot less chopping around. Like if you look at those other ones that were the intradays on the individual companies, they're choppy because you have a much smaller population pushing that thing around. But you've got large institutional money taking positions in broad country indexes with diverse economies, and you get these kinds of moves. That's why these two guys are frog champions, because they work like that on swings and intraday. So target selection matters. This is a nice job crushing it for 4.3. I like the COTA 2 reentry and a quick cut and then the reentry again. That's really good work. Oops, wrong one. Let's get our daily report up here. Oops, wrong one. Stand by. All right, let's go to the daily report. We are still in sideways normal. We're right at the 200-day moving average, so we're about ready to start see some pundits saying, hey, this is the beginning of back to the bear when it gets above the 200, so there'll be technical traders buying this thing. So we're ahead of the curve on that one, and this is now getting pretty healthy on our index. only the very longest term, and that's come well out of oversold. Risk Z is still favorable and starting to poke upwards. It went positive today. That's good. Boeing, Diamonds, Intel, Verizon, looking pretty good. Notice that Tesla is no longer in the max pain stack, so there's some evidence of that beginning to heal. Although our healthcares, the Pfizer's, United Health, Johnson and Johnson, and Walgreens are still lagging. Dow Tactical. A lot of small range days today. Some 5DDs, so we're going to respect Johnson and Johnson. Coca-Cola was a percent loser today. It's had a bad 1 day and 10 day and had some breakdowns. So Coca-Cola is showing signs of cracking, as is McDonald's. That's actually not healthy. And then Procter, also a 5DD. So those are primed. Those three are primed. Coke, McDonald's, and Procter as 5DDs in this sideways. So they've had 5 days down in a row. I'm ready to trade that as a breakout in either direction, as a 5-day failure or as their standard 5DD trade. You've got some good reward to risk ratios on the swings right there. Meanwhile, the winners continue to win. Boeing and Caterpillar, the least surprising. That's another 3%. I mean, I feel like a dummy for not having a swing on Boeing. I've been calling that one from a distance and not taking advantage of it. I need to listen to myself a little more. DuPont in the industrials doing well. Visa in the financials doing well. Intel beginning to be a leader in tech land. So we got to read the tea leaves there. Kenneth, get better. ETFs, this is the story right here. That is the sign of global health and healing right there. That's everything you want to know. The defensive plays are the ones that are weakening. Staples, utilities, healthcare, and consumer discretionary. But those three defensive plays, and what's working? Energy, oil exploration, clean energy. That Latin America and Brazil piece is still working good too. The steels, metals and mining, XME. That's your U.S. Steel, Cliff, and Alcoa. Hot commodities right now. Hot metal, watch out. Burn your hand. Handful of auto framers in the usual way. Again, so I want you to notice that what always flows to the top in here that gives you these multiples is short-term weakness. So, United Health, Pfizer, Johnson and Johnson, Coke, Merck, and Procter and Gamble. So it takes that kind of short-term weakness to create the opportunity that if it does begin to recover and people are buying this as a value play, then that gives you the return to the 10-day high. And if the risk is small, that's what these numbers here are showing you get 3 or 4 to 1 just to the 10-day high. You can make that phase one of a swing. And then if it breaks out from there, you got a really good entry. If you take a look at all of those swings I showed you on the earlier portfolio, they were all like that. They were all things that had been strong, sold off, stabilized, and then started that slow march. And by being on the 30-minute chart, we were able to start getting some of those early positions intraday on tight risk boxes and let it grow for a little bit, and now you're seeing the payoff of that strategy. All right. We're going to look at our regression line fractals. Tesla is now down to just 5 ATRs below its fair value. Apple, Chevron, Coke. So Coke is showing weakness. United Healthcare is showing weakness. Overheated ones, Nike, JP Morgan, Boeing is a special 10 ATRs above. Nike 14 ATRs above its fair value. How long can that last? There's still some value built into natural gas, agriculture, oil exploration, and international energy. So the energy still has some room to go. That's why I'm excited about that Devon and clean energy swing trades. There's still room for them to go. That's what I mean by these become sources, this upper stack here, these become sources for potential swings because they are so far below their fair value. Essentially, the fair value in the RL270 is up here. The short-term price has pulled it all the way down to here. And when that turns, if you can put your tight risk box in here, and then you see something like natural gas, there's 11 ATR back to its long-term fair value. 5 in Tesla, for example. 4 in Apple. So that's value swing trading. In the sniper, again, we're looking for compound critical states in the sniper on the basis of extreme locations, either extremely overbought, oversold, or precisely in the middle, which gives us that fence sitter that could go in either direction. And then looking at 3 different time frames, over 150-day look back, 30-day look back, and 10-day look back, and we're looking for extreme locations. And we're also looking for extreme volatility, either extremely abnormally quiet or extremely abnormally volatile, because it's in those two extremes, far removed from the average, that you know this thing is either wildly in play or has been ignored for so long that the breakout will be amazing. So the combination of extreme conditions in location and volatility is what gives us the compound critical state. We only have a couple Godzillas because the recovery's been actually pretty good. BAX and marijuana. So that's a stealth trade. I should probably be looking at that one, shouldn't I? So I'm going to go back from my swing to the my boot camp tactical. And look at marijuana on a 3-month. Sure enough, that's what Godzilla looks like, my friends. Here's our 150-day high. Look at that, up around 15, and it has sold off 50% down to below 7. And that's where the winter turned. It's in the spring, and you got a really tight compression on a 10-day and a 5-day. So if this holds support, and you just get a 50% retracement back to 10, that's a 50% gain. But if it fails, that fails. And how much risk you got to have? Well, maybe that much. So how many of those little boxes are there to the upside? 1, 2, 3, 4. You can make a trade on that. Now, I want you to notice the characteristics of the upside move is in increments and stair-stepping and careful measured fear. And then the failures just collapse. That's why the collapsing dragon is what we love. And when this goes from summer to fall to winter, bam. That's why that move. And what did it do over here? It came down in the winter, held out in the spring for a while. It could not make that move, and when that fails, bam. That's why you want compound critical states. When these things collapse, you get those kinds of moves. That's why the collapsing dragon is the primary pattern. The longer the term look back you're looking at, we're looking at, date, was it just 30 minutes? Yeah. No, those are daily bars, sorry. That's what that looks like. That's what a Godzilla looks like, friends. Wildly oversold on 150 and 30 day. Hey, this 150 day high was also the 30 day high. And that low is the 30 day low and 50 day low, or 150 day low. Now, look at the psychology that went from generally positive feelings to utter collapse. And then it went from utter collapse to indifference and sideways. The difference in psychology from here to here is extraordinary. Absolute panic and terror to complete indifference. That's failure to fail further. Where are all those guys that were convinced this thing was collapsing? Oh, it's collapsed to such a level that there's not enough room on the downside. They've picked the bones clean. Oh, all right. When are those bruised buyers going to come back in? When it breaks up, what would be the signal? Above a 10-day high? Sure, why not? I'm just going to buy it tomorrow. Just be done with it. Tired of talking about it. So that is what a stealthy Godzilla looks like. Horribly oversold. And then abnormal volatility. So extreme location, extreme volatility condition. The extreme here is the fact that it's below zero on the Z-score. So it's abnormally quiet. So it's abnormally not volatile. That's what we mean. That is like a very still pond. No waves at all. And then somebody throws a rock in there, and the sound of that sends ripples and gets everybody agitated. Because of the absence of sound, that first move causes fear and excitement. So the absence of volatility is a significant condition. So I'll be talking about this strategy with that Society of Technical Analysts in February, talking about exactly this kind of condition and approach. They were very interested in hearing me. So that's the sniper. My brother's updated his sniper master course there on Rizuku, and is engaged. He's got students and coaching, and there's a limited amount of that he can do. So if you're interested, you ought to get a hold of him while there's slots. I told him to be careful about regulating how much coaching he does so that he keeps time for himself for trading, which is better for him than teaching. All right, I think that's everything we got for today. We'll get this published and posted, and I should also finish up with the multi-time frame NDX. I just want to show you that you got to pay attention to the anomalies in here. When you see that much goodness everywhere, you say, what is wrong with Coca-Cola? And what is wrong with McDonald's? Can they be going to zero? No. Who's got to own those? Everybody that's a value player for America. We got to go look at that. I'm going to go back to the S&P 500. Let's just go look at McDonald's while we're here. Permit me this diversion. I don't mind that. That actually feels pretty good in McDonald's. There's a Kata 2 getting ready to go. That has held. Now, there have been a couple disappointments, but that's still holding at a nice level. It's holding on the sell-off where what used to be resistance might now be support. So I think that's a reasonable entry above 270 in McDonald's. And if you put a tight stop on that, you got 2 boxes to the top, and then if that goes, it'll be just like, oh yeah, that's why people want to own McDonald's. All the guys who bought around in here are still holding. So that's just a little bit of profit taking, holding at the previous resistance, which is now support. That feels okay. McDonald's is fine. Coca-Cola. Same thing. All it did was, and this is the life cycle of a swing trader. You know, the sell-off created some grinding upward possibilities with K2. It held at the 150-day high, and then leg 1. That collapse, when that fails, oh, you got to be pounding that one all the way down through a horrible winter, all the way down to 54. SSC, leg 1, pause, leg 2, and now it's holding where it held before, and the pullback is orderly to a level that used to be resistance. So if this can hold right here, that's problematic. This is a great setup, because if that fails, then you think it's coming right to here. So that's a $2 intraday move and maybe a 20-cent or 40-cent risk box intraday. That's 10 to 1. But if it holds, then you have a grinding swing to here. But if it gets above 64 and breaks that double resistance, then that's ready to go. So I like both of those as opportunity trades. Yeah, that's pretty nice. Hey, just if for those of you interested in the TC 2000 bundle, we'll give you a New Year's deal on that. But what I can do in the S&P 500, if I just want to do this 30-minute swing stuff, I can just go to the reward to risk ratio. That's like the auto framer. Let me put that on dailies. Oops, reward to risk. And move that to the top of the stack. Sorry. So what I've done here is simply taken a look at those symbols that have lost the most from their 10-day high and then computed the reward to risk rate. So BAX, which you saw from our other highlight on the other report, this I can just find anything better than 2 to 1. Those are all automatically great auto framers with the intraday R10. And if you're using daily risk, what the size of those are. So let's just see what kind of value plays there are in hand. What's BAX look like? Beautiful. Oh, there's your Godzilla. BAX. Holy smokes. 4 days failure to fail further. If it fails, crush it. If it holds, it's going to come back to here. That is a 7 to 1 to the 10-day high. Where's the 10-day high? The black box. So if you use that as a reasonable price target to the upside, and you take a look at the daily risk box, there's 7 of those daily risk boxes. 5, 6, 7 to the 10-day high, and that's how you get a 7 to 1 reward to risk ratio. That gives me the scan as soon as the market's closed on the entire S&P 500. And if that's something that you get attracted to, how easy is that? And now you have all of the framing data over here. What's NOC look like? Same thing. Notice that this thing is looking for, you can even zoom down in here. So the 10-day high is here as your price target. Here's that little daily range. How many of those daily ranges are there if it were to retrace? 6.5. Hey, what if I just got a 50% retracement? Then I still have a 3-to-1 trade just halfway up the stack. Hey, what if this thing fails? Then it's easy to see that this thing collapses because that's also a 30-day low. And it can easily get, if that fails, it could easily get to here, 470. So if that's the size of my risk box, there's a 2-to-1 trade to there. And if that breaks, look out below. So this little sort on the auto framer is a pretty handy way to find interesting trades that feature this kind of pattern, where you've got a strong sell-off from a 10-day high that has compressed into a tight daily range, which gives you a large reward to risk multiple. And then this is stuck right in the middle, compound critical state. If that fails, you can see it's going to get to those price levels, and you got a nice trade in either direction. That makes this a compound critical state. Guys, it doesn't have to be harder than that. All right, that's everything I got for today. So I'll give you a $2,000 discount on the TC 2000 bundle if you're in the sound of my voice and contact me in the next 2 weeks. Take good care, and we shall see you tomorrow.